Next up, we have Mr. Braja Mohan Mishra, former Principal Advisor, RBI Central Office. His topic is Central Banking Policy to Support Trade and Industry. I'll quickly read his profile. Mr. Braja Mohan Mishra has MA in Analytical and Applied Economics and MPhil in Economics from JNU. Mr. Mishra received SECP degree from Columbia Business School, New York. After a stint of 3 years as a lecturer in economics in a government college, Rajendra College, Bolangir, Mr. Mishra joined the Reserve Bank of India in April 1984 as a research officer, and since then has worked in several capacities in areas of agriculture, industry, financial markets, monetary modeling, fiscal price analysis, money and banking, so on and so forth. Mr. Mishra worked more than 6 years as a general manager and head of research in Kolkata, West Bengal. When Odisha was under his jurisdiction, he did a pioneering research work on super cyclone in Odisha during 1999. Mr. Mishra has been associated with several committees, working groups, and finance commission in India. Mr. Mishra has published more than 20 technical papers in journals of repute and has made presentation in more than 20 international and more than 50 domestic seminars and conferences. Retired as a Principal Advisor, Chief Economist of Reserve Bank of India in July 2017 and has been a freelancing economic consultant since then. Sir, it's our honor to have you with us. As a token of our appreciation towards you, we would like to extend a small sapling. I request Mansi to please bring the sapling. We have with us Mr. Braja Mohan Mishra. Sir, I request you to please come here. Thank you.
Okay. Thank you, Maruti Media and the UCCIL Chamber of Commerce of Odisha for organizing this monumental seminar on Odisha Vision on Finance. I am delighted to be here to speak because basically I am a finance man. So whenever there is a request to speak in a seminar on finance, I usually, unless I am unavailable, I cannot say no. So here, I want to say one good thing, two bad thing. Here what happened, as you know, time is running out, I used to go to my training college in Chennai to take 2 sessions. Yeah, thank you. So one session will be always before lunch. The second session will be after lunch. As you know, before lunch people will be hungry and may fall asleep. And after lunch people will be mostly after heavy food may fall asleep. So what I used to do, I used to take both the sessions, focus with, and with lot of volley of jokes, I used to entertain the audience. I saw none of them fell sleepy even before lunch and after lunch. Good news is that I was a teacher before joining Reserve Bank of India. And so I know time management while speaking. So I have observed that most of the speakers, they have exceeded their time limit. And I have carefully listened to all of them. All of them have spoken very nice words about their own areas. I will try to be very focused and try to finish my speech within the time limit. So that is the, I think, a good news. What is the one? This one? Okay. As you know, I am from Reserve Bank of India and I will be speaking about Reserve Bank of India. Even the topic is indicated the central banking, I will be talking central banking in India, not outside India, to support industry and trade. You know, Reserve Bank is a multitasking organization. It is not having one function, it is having several functions. The important functions are here. First function and the most important function, monetary policy. Second is currency management, money supply. Third is banking regulation and supervision. Fourth is payment system. Fifth is banker to government and banker to banks. And the last one is many developmental roles Reserve Bank also play. The first one is the monetary policy framework. As you know, Reserve Bank operates the monetary policy. It has got a mandate from the government to maintain the inflation. It is called flexible inflation targeting framework. It was established in the year 2016. The mandate came from the government that government has to maintain the inflation within a range of 2 to 6%, middle rate is the 4%. So 4% is the inflation target given to Reserve Bank of India. And this target was initially for 5 years and it has been again renewed up to 2026. So Reserve Bank operates the monetary policy through a committee which has 6 members, 3 members from outside, 3 members from Reserve Bank of India. So it will have every 2 months a meeting. In the meeting, the 6 members will widely deliberate and take a decision what will be the monetary policy. The monetary policy major decision they take about the repo rate. Repo rate is the decision that they take, and they take also other decisions along with that if at all it is required. Now, what are the different instruments of monetary policy? Let me try to give some idea about it. First, I have said repo rate. Repo rate is the rate at which Reserve Bank provides liquidity to different institutions. And the present repo rate is 5.5%, which was stipulated in June 2025. Reverse repo rate is the again reverse of it, which Reserve Bank absorbs liquidity from the banks. And presently it is at 3.35%. There is a standing deposit facility, which is acceptance of uncollateralized deposits from the market. Reserve banks accept it at the rate of 5.25%. There is a marginal standing facility, which is 5.75% presently, and there is a liquidity adjustment facility. Reserve Bank is an organization which provides or absorbs liquidity from the market. Whenever there is excess liquidity, different mechanisms that I have indicated here, or whenever there is a shortage of liquidity, Reserve Bank provides liquidity. Basically, the liquidity is provided to the commercial banks. Let me tell you, my major focus here will be mostly commercial banks. Maybe I will try to cover up other organizations whenever required. There is one bank rate. Bank rate is the rate at which Reserve Bank is ready to buy or rediscount bills of exchange from commercial banks. This is at 5.75%. There is one important rate which is called cash reserve ratio. cash reserve ratio is the ratio the commercial banks are supposed to maintain with the Reserve Bank of India. You know, this ratio was not used for quite some time. Only June 2025, it was changed 1%. In 4 equal installments, it will be reduced to 3%. I will come to it a little later. There is a statutory liquidity ratio. That is the type of assets which banks are supposed to maintain with themselves as a ratio of their net total demand and time liability. That is the statutory liquidity ratio. And there is a open market operation, that is the buying and selling of securities in the market. There is one important thing I want to highlight here. When talking about monetary policy, there is always a requirement that there will be change of repo rate. When the change of repo rate is done, Reserve Bank expects the commercial banks to follow up and also change their own rate. This is called monetary transmission. Now, we had 2 periods of the repo rate. One was the tightening period, May 22 to January 2025. This is a tightening period. During that period, repo was tightened by 250 basis points. After pandemic and all those period, then we had a easing period. Easing period was February 2025 to August 2025. Repo rate was reduced by 100 basis points. Now, when this repo rate was reduced or repo rate was raised, I have also studied whether commercial banks have followed through. I saw mostly they have followed through and transmission has taken place to the depositors and also the lenders. So, this is one good news that in India, the transmission mechanism is working and Reserve Bank is getting the benefit of influencing the behavior of the participant. That is very crucial. When we are talking of transmission of interest rate also affect the real sector. What are those real sectors? It also affect inflation. It also affect growth. What is the basic objective? Basic objective of Reserve Bank is to affect the macroeconomy in general. So if at all there is a policy change, if at all it is affecting inflation or not, if it also affecting the growth. We have seen that CPI inflation has been on a declining path for over 9 consecutive months to reach 8%, 8-year low of 1.6% in July 2025. But I think in August it went up to 2.1%. But still inflation is quite low, much below the middle rate of 4%. CPI inflation in Odisha, we can have some reference to Odisha. Since we are talking of Odisha, CPI inflation in Odisha has been comparatively much lower. In fact, for July and August, it is in the negative rates. So Odisha's inflation is presently much lower, so we are better off. Of course, I would not suggest a negative inflation. Always a good, small bit of inflation provides support to growth. But still, since we had a very high level of inflation during the earlier year, I think it is a feedback. So we are getting a low rate. Although quarterly GDP growth rate, in case of GDP, what is happening in all India basis? Q3 growth rate of 24-25, we had 6.4% growth. Q4, it went up to 7.4%. And first quarter of 2005-06, what is the growth rate? 7.8%. So this quarterly growth rate say that we are improving in terms of growth terms. So I think the type of monetary policy decision has been taken. It has a more or less, even though it is not a direct relationship, there is some impact on the growth, positive growth. And in case of Odisha, somebody has already said that our growth compared to all India level has been higher. And so I think in case of other macroeconomic factor, it is also doing well for Odisha. Now, my friend was telling about the Vikasit Odisha document. There is one quotation there that presently Odisha is contributing around 2.9% of national economy. Well, then what is the expectation for Vikasit Odisha? Vikasit Odisha, again, they have two periods. One period is 1936, that is completion of 100 years of Odisha birth. Second period is 2047, 100 years of Indian economy. So for 2036, there is an estimate that Odisha is likely to grow to 4% of national economy. And by 2047, Odisha is likely to increase up to 5% of the national economy, 47. This is very interesting. He has said already, those who have not read the Vikasit Odisha document, kindly go through. It is a 604-page document. I have read it basically before coming to this seminar. If you get opportunity, kindly go through it. Then, the sectoral distribution of credit. Earlier, after particularly, if I am correct, after the bank nationalization in 1980, Reserve Bank provided some sectoral distribution of credit, the most important being the priority sector lending. So priority sector lending means the banks are supposed to provide a part of their total lending to priority sector. Priority sector is defined, I will come to that. It is defined. The total priority sector loan should be 40% of the entire lending. And this is for the commercial banks and those foreign banks more than 20 branches. For foreign banks, 40%, but they can resort to 32% of export credit. For RRB, it is 75%. For small banks, it used to be 75%, now reduced to 60%. Now, what are the different types of category? I have one picture, you can have a look. Agriculture, it is 18%. Micro unit, 7.5%. Then there are also others like housing, education, social infrastructure, renewable energy, weaker section. All together, they should contribute 40% of the total lending as priority sector lending. We can have a general look where the credit is going at all India level in terms of agriculture and industry. Now, one thing I want to tell you, one particular bank case of or organization not able to meet, what they will do? They cannot meet 40% priority sector lending. Either they can buy priority sector certificate from a bank which has surplus, or they can invest in RIDF fund of the NABARD. Okay, so this is possible. So I think in case of Odisha, mostly it is made by resorting to RIDF funding. Odisha account for 7.8% of RIDF sanctions. Now, in case of distribution of bank, agriculture, this is as of August 2025, the latest information. Agriculture account for 13.2%, industry 22.6%. And within the industry, what are the small, micro, this is given here. Services, 29.1%. And the major amount is accounted for by personal loans. You know, personal loans account for 35.1%. This was one major concern for Reserve Bank of India, that why so much of money is going to personal sectors. And for this particular reason, Reserve Bank increased risk weight for personal loans, so that the personal loan category can be reduced by the commercial bank. Okay. Guidelines for lending rates. You know, earlier period, there are rates, deposit rates, lending rates. Reserve Bank was prescribing how much commercial banks can charge to each sector, or this sector, that sector, whatever. Now, starting with 1994, they said up to rupees 2 lakh, there will be some control. Then the rest of the amount they can charge on the basis of what is called the this is BPLR. BPLR system they can introduce and they can charge. Now, there was one problem with the BPLR system, that many of the banks were charging many borrowers below the BPLR rate. This was not acceptable to Reserve Bank of India. Reserve Bank said, we fix the rate and you are not following the rules. Then they said, they introduced in 2010 one base rate. Base rate is the minimum rate the commercial bank charge. They cannot charge lower than the base rate. This was introduced in 2010. Then Reserve Bank was still not happy. They introduced in the year 2016 a marginal cost of base funds. What is the marginal cost? Based on the marginal cost, the banks can fix up a rate called MCLR lending rate. And this is more or less responsive to changes in policy rates. But the last one, it is based on external benchmark based lending rate, EBLR. It was introduced in 2019. What is that? Based on the external benchmark. External benchmark means mostly repo rate. The lending rate will be fixed to the repo rate. Once it is linked to the repo rate, whenever there is a repo rate change, there will be a change in the lending rate. So presently, because there are series of loans, long-term loans, etc., many banks, they have their loans which is under BPLR, which is under base rate, which is under MCLR, which is also under EBLR. So slowly, people will be shifting to EBLR. Now this issue is called collateral and subvention. I think we had a long session. Madam Mann, she was explaining this about collateral and subvention. Only one, I want to emphasize the subvention part, that there is a credit-linked subsidy scheme provided an upfront capital subsidy of 15% capped at INR rupees 15 lakh. There is a capital subsidy which is provided. I am telling this because you people should know about it. There are schemes that you get a capital subsidy if it is for the upgradation of technology. There are, two rates I have already said, which are used, that cash reserve ratio and the statutory liquidity ratio, which are used for preemption of resources. These are all regulatory policy of Reserve Bank of India. Regulation is done to reduce the amount of funds or resources available with the banking system. The first is CRR, the second is SLR. You know, when in June 25, the CRR was reduced from 4 to 3%. How much resources were freed to the banking system? Can anybody imagine? It is 2.5 lakh crore with the reduction of 1% CRR given to the banking system. In terms of dollar, it is $29.1.5 billion. This much of resources. Now, that means the liquidity of the banking system has gone up by reduction of CRR. And RBI sets SLR to, it has been 18% since April 11, 2020. There has been not much of a change. But let me just highlight one thing. In 1992, SLR was 38.5%. CRR was 15%. And plus additional CRR was 10%. So how much fund was taken away from the system? 63.5%. Now, compared to that position, we have come to 3% plus 18%, 21% presently. So we are much better compared to the 1992 period when regulatory intervention was the highest at that point of time. The one important issue, Reserve Bank also tried to provide for financial stability. So, financial stability, you know, first is the risks weight capital allocation. Mananjan Bhuya Sahib said that we have to provide for 9% capital, and Reserve Bank is very particular about it. And so this is, he was, but see, this is not an Indian phenomenon. This is a global phenomenon. It is basically it has come from BIS, and there will be a revision with from April 1, 2027. April again, when April 27 will come, we will have a new framework for credit loss. We have to make further provision for that. There is a recent guideline in July 24 focusing on stricter scrutiny of willful defaulters with a debt over rupees 25 lakh. That means now NPA is much more scrutinized, and the regulatory policy are stricter. Now, let me give you one good news. After all these regulatory practices, what has happened? You know, we had an earlier governor who was very, very cruel about NPA provision. And he imposed very restrictive conditions on NPA. But I think after almost 10 years, we are getting the benefit. Now NPA has come to one of the lowest level of the commercial banks. And consequently, the profitability of Reserve Bank profitability of commercial bank has increased much more. We are no more profit-making industry, banking sector. It is it is not a loss-making, it is a profit-making sector. I think let us come to the concluding observation. Check clearance, Mr. Manavendra Mishra has already told. We have discussed about various policies of Reserve Bank of India, and these policies seem to have supported industry and trade in India. Reserve Bank makes macro-level policy decision and cannot take different. Banks follow the rules religiously across all the states. Whichever state they have to follow it religiously. Our discussions revealed that Odisha is doing comparatively better in terms of lower inflation, higher growth, expect to improve its share in national income by 2036 and 47. But here I have some observation. Why Mr. Manavendra Mishra, he has spoken about, I think, about 12 different sources of lending. But let me tell you, if you go and see the market, whether stock market is active in Odisha. I don't think so. Whether non-bank companies are providing that much of resources, that is no. Non-bank finance companies, again, they are depending upon the banks for support. Of their own, they are not able to raise resources. Okay? So, in that sense, it is basically even now, henceforward, banking sector has to remain as the major source of funding industry and trade in Odisha. Banks, you know, here there is, I am now supporting Mr. Manoranjan Bhuya. He said, I think Mr. Pandey in the morning session he said, banks need to act vigorously to identify potential borrowers in the possible flourishing sector of services and industry. I think this is very much required. Banks do need to act vigorously. And there is also need for the potential investors. Potential entrepreneurs need to take advantage of the facilities provided by the banks and the government. One particular comment was made about the export potential of Odisha. Let me just clarify that matter and finish off my speech. They said that a lot of export is taking place from Odisha, this sector, this segment and all those things. What is the export intensity of Odisha's economy? It is only 12%. In case of India, it is more than 20%. Okay. Now, because it's Bharat, it has some estimate about the future level of export potentiality of Odisha. They say presently, Odisha is accounting for 3% of Odisha, total exports of India. By 36, it will be by 36, it will be 5%, and by 47, it will be 7.5%. So let us all now rejuvenate ourselves, and the banking segment try to upgrade their, whatever activities and their manpower resources to meet the coming challenges. Thank you very much.